Data shows that Bitcoin mining hash rate has seen a sharp jump to new all-time highs despite the network difficulty, registering a 7% rise recently. The mining hash rate refers to the total amount of computing power currently connected to the Bitcoin blockchain. This metric is very relevant for the BTC network, as its value can have a direct influence on the chain's security. A larger hash rate means that there are more nodes for a malicious attacker to go through, and such an attack can only be successful if the attacker can bring under control at least 51% of the hash rate. This benefit on the security from a higher value of the indicator only appears, though, if the new hash rate that's being added by the miners is sufficiently decentralized. Now, here is a chart that shows the trend in the 7-day average Bitcoin mining hash rate over the past year. From the above graph, it's visible that the 7-day Bitcoin mining hash rate has registered a rapid uptrend during the past couple of weeks and has smashed through the previous all-time high. This sharp rise would suggest that the miners are finding the blockchain quite attractive to mine on right now. A potential result of the recent price surge and transaction fee mania that's boosting their revenues. And besides the implications for security, the hash rate also contains information about the competition present among the miners. A feature of the BTC network is that block rewards are only given out at a fixed value and rate. So if there are more miners on the chain, the share each one gets becomes smaller. The mining difficulty is what ensures that this dynamic remains true. If the difficulty didn't exist, a rise of hash rate would result in the miners going through blocks faster, thanks to the additional computing power and thus generating the rewards faster as well. But as the blockchain's code contains this feature, the network ups its difficulty whenever the hash rate goes up, so that the miners are slowed back down to the standard. But it came to it works properly, and again, there's a 7 time to and the presence of the difficulty means that the Bitcoin blockchain doesn't fall prey to inflation, as the block rewards, which the feature controls the pace of, are the only way to produce more of the asset. And while this is true, the feature can be troublesome from the perspective of the miners, as the competition between them has only been skyrocketing as the hash rate continues setting new records. The latest difficulty adjustment on the blockchain raised the difficulty by almost 7%, but it would appear that so far the miners haven't been discouraged by this increase, as they have only continued to add a further amount of hash rate. Bitcoin has seen a plunge recently, as its price is now down to the $42,700 level.